Good morning. It is Thursday, September 21st. I slept in today, I think till about 7:30. So, I needed to sleep after yesterday's debacle with the Fed. This is SPY on your screen. We'll kind of go over it. What did the Fed say? Fed kept rates at the same level. They didn't hike, but they signaled and with no uncertain terms, higher for longer. One more rate hike, they said. The market hated that news. You can see the afternoon candle had a 1.14% swing from the highs of 443 to the lows of 438. It closed at the lows, 438.58. So there was no momentum. No hike now, but one more hike expected. Inflation is slowing, but remains elevated. Employment metrics are weakening, but remain strong. Economic activity is slightly improving. Let's go and look at, and I was just creating this. Go to a 5-minute chart, because I will show you the note that I just made, and I'll include it in the newsletter. But the note that I just made, basically it highlights right here. That is 1440, which is 235. While he was speaking, he started actually answering questions at 1440. The market didn't mind, the keeping the rates the same. But when he signaled with no uncertain terms that we're going higher for longer, that's when this thing dropped off. You didn't have confirmation. You still don't have confirmation. In the pre-market, you are down almost 1% at 0.78% on SPY. So where do we go in this market? Again, I kind of point out, if we go back to the algorithm and we just run the algorithm on SPY, we're in this chop, and it's not huge chop. I mean, you're coming back to the 200-day. The next support is 436, and you've broken through that in pre-market at 435. The levels from yesterday go down to about 430 as the next level of support. So we're in this chop. It's not huge. If we go back to a long term, what I want to point out to you, if we go to a weekly on SPY, you're up here. So when the Fed started raising was February of 2022. February of 2022, let's just go to a monthly, because that might show it better. January 2022 was an announcement, but February 2022 was really when the Fed started. You opened February 2022 at 450. Your low was 410. You closed at 436. So that was the start of the MACD cross down. So we're only back. You're at 438. That's a little over one and a half years ago. But when the Fed was at zero and signaled that we are going to hike, the market basically, faltered and kind of fell down and freaked out. And you've been in that fall all the way up until January of this year. And in January of this year, hey, things may be coming to a halt. So we're going to go back up. You've basically just created that crater, and you've come back up it. So no need to panic. No need to say, oh my God, where are we? Are we really crashing down? You could come down here to 400 and still be in some type of bull market, because you're above the 50-day. The bull market remains above the 50-day. This SPY, this goes all the way back to 2011, where we dipped under the 50-day. And the only other time we didn't use the 50-day as support was COVID. That's it, when the world shut down. So no need to panic. In my mind, it's a buying opportunity. Don't load up the Brinks truck, because you're not done yet. If you're watching this on day to day and panicking, it just means that you don't have your eye on the long-term outlook. So I'll calm you down. I did get some calls from friends. That 50-day right there is at 385. Could you come down there and touch it? I just don't think we're at that point. I don't think that we're at a point where people are panicking, pulling their money out. Bond rates will start to come down. As bond rates spike, remember when I say this, if we're higher for longer and that long-term bond rate starts going up, you're going to see equities come down. But at that point in my mind, equities are still the long-term choice for anybody long-term. So you pick your stocks, you pick your ETF, and you keep on going. So we did have some big news in the market. I signed a deal with Seeking Alpha, so I'll get the link up there. But it's a $50 coupon, I think, until the end of the month. But it's a $50 coupon. I'll get a link for you if you want to try it. There's a free 7-day trial. I am an affiliate, so I do receive compensation for it. They've given me a free trial. They're not limiting what I have to say about it. I just haven't worked it into my system yet, and I'm trying to. One thing that you guys know is with TrendSpider specifically, that's the one paid tool that I kind of promoted, and this is the second paid tool that I'm promoting. But the goal is to work it into my system. Even with the newsletter, man, it took me 1.5 years to start a newsletter because it wasn't in my system. I didn't have it going. I like a system. And so I'm still trying to work Seeking Alpha into my system, but I will have this link in my newsletter so that you guys, if you want to try it free for 7 days, you can. But the $50, my goal is to find somebody who doesn't want to sign up for TrendSpider because they don't want to necessarily learn about technical, but they want an edge on some of the fundamental stuff. And hey, every 5 days or so, maybe I want to look at a stock. Maybe I want to look at my portfolio. It has a special portfolio tracker that I still have to try. But it's $189. That's not much to pay, for a year. But Cisco did announce that they're acquiring Splunk. And Splunk, they're acquiring it for $157 per share. So SPLK is Splunk. Splunk popped. It's now trading about 144.45. It closed at 119. That's a nice 20% gain right there. $157 per share. You will remember we talked about Microsoft buying Activision Blizzard at $195 a share or $95 a share. Something of that. It never reached that, and it still hasn't reached that because there's uncertainty if the deal will go through. This is trading at 144. The deal's at 147. My guess, just a guess, is that at some point in time you can buy this probably at about 130. I think today's hype at 144. They have to go through some regulatory approval. They have to get some things done. This isn't going to be a quick deal. The Cisco CEO is on CNBC right now with the Splunk CEO. I have a friend who worked for Splunk. Not very good news from inside the company. Great tool, but yeah, she kind of had some not so nice things to say. But think about your own company. When you're inside, do you have really nice things to say? Not worried about it. But this one, I think, is a great deal. If I were to buy either company right now, I would buy Cisco because I think this provides them a software tool that they haven't had before. And if you remember what I told you, whenever a company buys a company, the buying company always goes down. Cisco's down 4%. You're in this descending wedge. You don't have confirmation. I would think that you could get Cisco in the 54 handle range. The algorithm doesn't work great on Cisco. Cisco's one of these mainstay bellwethers. I mean, it's just a high, it's a low multiple tech name. If we go over to FinViz and we look at Cisco, the PE is 18, so it's not high. The dividend is 2.81. You're up 16% year to date. 58 is the 52-week high. You're 4% off that. 38 is the 52-week low. So you had your chance to buy this one. The average target price on this is 57. You're trading right at 55. No need to buy this even at 53, but I do think you get back up to the $57 to $58 range if you wanted to buy it and maybe make 10% off of it. Remember, I always said we're in a choppy market. Sometimes choppy markets, the individual stocks will perform a little bit better. It's hard to tell. But Cisco, in my mind, you take a look at a long term of Cisco. I had Cisco way back in the 90s, in the 2000s, early 90s. I wound up getting rid of it just because I had to pay for college. I mean, I'm an old guy. Give me a break. But you can see Cisco and during the dot bomb. We'll go to a monthly because I want to show you the dot bomb. Let's do monthly. You can see, I mean, I paid for college with Cisco. It was a monster stock way back in the day. You can see right here, kind of got out, in this range. I think I got out at 277. I think I got out more here. I wound up graduating college, I think around here, and paying off student loans. When you buy it, what, $1.50 and you're at 7 within a few years, you think, God, I've got the world at my, the world is my oyster. And then you realize, oh my God, it goes all the way up to 66, but you go from 66 down to $8 within 2 years. Yeah. I mean, Cisco was at that, and it took they're still not at 60, but at $80 where they were. Yeah. I mean, this was the high up here was $82. And mind you, this includes splits. So this hype was absolutely 100% real. Cisco was going to build the internet. So, yeah. It's an interesting one, but I like Cisco. I think this is a good deal for them. I do think that they have an opportunity to for their software platform with Splunk. I think it's a good thing for them. The other thing, FedEx announced earnings, and FedEx is up in pre-market. So we'll take a look at this. If you want Seeking Alpha and you want news on this stuff, this is where the tool really comes in. If you've got a single stock and you want to look at news on it, this is a little bit more upgraded than FinViz, because they do give analyst recommendations and news articles about specifically what it is. So FedEx, FDX is the symbol. They had their earnings. They it was okay, but they said, hey, good news to come. And so in pre-market, you're at 261. You closed at 250. It's up 4%. That is good news. So I like that one. Boeing, I have in my notes that Boeing got an upgrade. Let me see. I don't see it, but I think it was like a $240 price target. And I don't see it on FinViz. I don't know if it's coming out, but Boeing has no confirmation. It's at 202. I reiterate, Boeing is, in my mind, at 200. It's a $240 stock in good times. I know our resident airline guy, Joe, probably says that Boeing has more problems. It's just an enormous company. Look at where the MACD is, and I think you're fine. Honestly, I think you're fine with Boeing. I think they're going to announce a smaller than expected loss here. The Spirit fuselage issue, I think they'll overcome that one. It is an issue, but I think when what was it, 47 planes in China and about $16 billion or $17 billion, just a few planes need to be released in China to China and sold to China, and boom, you get all of a sudden you get $16 billion on the balance sheet. If that happens between now and October, look to this to get back to the 200-day. I mean, the 200 days at 215. So I think Boeing's an opportunity there. Another opportunity that I saw that is interesting, not necessarily great, because I was pounding the table on this one, not subtly, but fairly subtly. Pinterest, it had a move up here. And they had an investor day yesterday, and you can see in the morning, it opened up at 25. The low was 24. It closed at 26. So pretty good move there. I mean, 4.69% move in just a morning candle. It's got a $27.48 buy. I think this one gets to 30. What was interesting was I was either listening to a podcast or something, I forget. The chart is working off the lows, and we can look at kind of a long-term. Let's look at a weekly. What's interesting was there were two things that caught my ear when listening to the Investor Day kind of stuff. It's capitulating around here. I think 23 to 25 is probably a better time, but you can see that 50 days turning positive. Here at 27.20, it's up almost 1%. In pre-market, I think you've got some type of confirmation above the 9-day. So I like it. The 9-day and the 21 are kind of just hovering around. The 50-day is right around there. The Bollinger Bands are kind of cinching up, maybe looking to break out a little bit. The RSI is in no man's land at 53. What caught my ear was Walmart may want to buy Pinterest. Remember, PayPal tried to buy Pinterest, and they announced it. That was the beginning of the downfall. And this particular person said, hey, Walmart, Pinterest holds a lot. And with Walmart really being kind of, they could sell a lot through Pinterest. So it might make sense for a company like Walmart. Now, Amazon, no interest. They have their own kind of, picture folio and e-commerce stuff. But Walmart could really bring in a lot of people. And we all know Pinterest is used for home hacks, for decorating, for things of that sort. Could really bring Walmart into a new space. So I thought that was interesting. I think it's an opportunity. Here's what I wanted you to see about Pinterest, though. Pinterest right now, they're not making money. They're losing money. Their forward PE is 23. They're up 11% year to date. They're 12% below their 52-week low of $30. And I think they do get back to that $30 mark. That's why I'm saying I think it's an opportunity. So the main thing is forward PE of 23. What I want to point out to you is a company that has a forward PE of 18 and is absolutely killing it on cash flow. It is up 149%, but its PE is actually lower than Pinterest. It's Meta, and it's trading below 300. Meta, PE of 18, okay? It's 8% off its 52-week high of 326. It's 240% above its 52-week high of 88. So it's been on a dead climb. It's capitulating here. Average price target, 363. So if you're thinking about buying Pinterest for a pop, I think you're better off actually with Meta. And this is part of the reason why I think Meta is one of the best plays. Its PE is not crazy. It's absolutely not crazy. An 18 PE is just what the average stock is. Let's look at Meta. I'm going to look at Meta. I don't want to look at pins. Why did I type in pins? Meta is at 297 right now. Look at this capitulation right here. It's holding its 200-day. It's holding its 50-day. It's just gotten above there. It's right at the 50-day, so maybe it loses it today. But if your absolute bottom is 284, which I do think that's a significant support level because that's the 200-day. This company is making money. The problem with Meta and the reason why it's not a $400 stock is because Zuckerberg wants to spend on the metaverse still. That's the only reason this isn't a $400 stock. Other than that, you've got a $400 stock. At some point in time, this is a good stock. So, and I think, this buy here at 289, and you're at 296 right now, and the 200 days at 282. I think that buy at 289 holds up. You're seeing the MACD cross down, and the 9 and the 21 are a little bit up there. The RSI is in no man's land. I still say under $300, I got to add to this. I wanted to take a look at some of the stocks that I've looked at over the past and show you kind of the buying opportunity that I see. DraftKings, I should have sold over 30. I know I said I was going to. I didn't. It's at $29. DraftKings got you out with a 10% gain right here. I may get out at 29 and then back in when it drags it down to about 27. Or I may just add here at 29. Who knows? But I'm going to make up my mind on that one. Should have sold at 30. Again, bad management. I do this podcast and then I get sick of stocks and I go for a walk. That's my main issue is I probably need to do the podcast every other day or something. But PayPal, we talked about PayPal. This one got you out with a 2% loss. We're at $60. I can't reiterate this enough. I think this is a great opportunity to buy this stock. The problem is it's still pretty expensive. You've got a new CEO. You've got good fundamentals on this one. They're making money. Their forward PE is 10, so it's fairly cheap. It's down 14%. The problem is the margins. As it becomes more competitive in this fintech space, these guys' margins are shrinking. And as the margins are shrinking, even a forward PE of 10 is not good enough. The market's going to bring that down. Now, you're only 6% above your 52-week low of 57. I think that provides you a fairly good support level at 57. If you lose 6% and you go below 57, maybe think about dollar cost averaging. Maybe think about actually getting rid of the position. I'm in long on this. I think I'm in at about 65 or so. I will add to this one. Shopify. I know I said, hey, Shopify, I think it's a $70, $80 stock by the end of the year. It's at 55 right now. This one has pulled back tremendously. I will be adding to my position. This one, we had a nice 7% gain, but you can see this run. $55 last time. You got all the way up to $66. So you do have gaps on this one all the way down, and you have it up. We can pull this back here. The gap, I think it's up at 70 or so. Let's pull this back. I can't see it. I think it's moved a little bit past that. Let's see. The gaps are significantly higher. Yeah. Either way, let's look at a weekly on this one. We'll just go to a weekly. Shopify, I continue to say, they got rid of their cost center with the fulfillment. They handed that over to Amazon. They now partner with Amazon on the cost. That was their issue, is high cost. And you can see it's using that 200-day at 80 as a resistance level. But that's the 200-day. Your 50-day is still moving positive. In my mind, I think this one's a buy. It's a great, great service. Anybody that's used it, it's a fantastic service. RIVN. At 19, I said buy this one. It's at 22. It's down again. This is a $30 stock. At some point in time this year, it's a $30 stock. Just got you out with a 6% gain. The algorithm did, so maybe hold off on it. The RSI is in no man's land at 39. It's kind of heading down. Again, we're in this position where if you're trading stocks, it's a little choppy, a little hard to deal with. Palantir. This one is down 1% in pre-market. Hold on. Let me see. Palantir is down 2.31%. It was down 1%. 2.31 at 1440. You just broke the 200-day. Every time you've broken the 200-day on this one, it's been a buy. This is still a good stock. When you look at Palantir, if they announce in the next quarter that they are making money, this is a $30 stock. Their 52-week high is 20. Their 52-week low is $5.84. Now, if we go back to a long term, I can show you. They're losing $48 million. That's nothing. These guys have a market cap of $32 billion. They have 2.13 shares billion. 2.13 billion shares outstanding. They have $1.40 in cash. That means they have about $3 billion cash on hand, and they're losing $48 million. Not a problem. They will actually do fine. So on a long-term chart on Palantir, this is why I'm not concerned, because you don't have a 200-day yet. You're still well above your 50-day, but between May and now, that 50-day is moving positive. Maybe you pull back down to 10. Maybe you pull back. That would be a big move. You know what I do? I just add to it. This has a justification of a $25 to $30 stock. So Palantir I like. SMCI. We'll go over NVDA, which is a nightmare for anybody who's held on to it from the 500s, and you should have been selling and kind of trimming like I did. Super Microsystems. This is one that I bought right before the earnings at about, I think I bought it, right before the NVIDIA earnings. It was at 260, 270, somewhere in that neighborhood. It's at 234. You're below your 200-day. I continue to say that this gap at 300 gets at least touched, if not filled. I like this stock. It is oversold. The RSI is at 29. The MACD is low. I like this one. DPST, which is our triple levered regional bank ETF. This one, the regional banks have been doing nothing. This one got all the way up to, it looks like about 91 back in August of 2023, and it's just shot down since. So this was a nice 44% gain. You don't have confirmation. You're out of it right now. The algorithm loses you 69% on this. Buying and holding loses you 84%. Again, it's a depreciating asset. So I'd be worried about that one. But I do think that DPST is one to keep an eye on. The trading desk, I really like the trading desk. So if you watch any of the ads on streaming, the trading desk is involved with that. They're back to their 200-day. This is nothing more than just a stumble along the way. Every time they go below that 200-day, they pull back up. If we look at a long term of this one, I think this one's a buy. The problem is the valuation again. The valuation is rather high, but the trading desk is just one of those that's going to make out in the long term. These guys are making $129 million in income. Their market cap is $39 billion. The PE is 315. The forward PE is 52. That's expensive, but the valuation, if you come down into the 60s, I think you could play this back to the 70s. Just to understand that this is an opportunity to buy this stuff. Now, finally, NVIDIA. NVIDIA has pulled below our Blaze stock price of 420. It's 418. And this is just coming back to the 200-day. I mean, you can clearly see it. I think 400 is your... What do you care 2 years from now when this is at 600, 700, and you bought it at 418 versus maybe you got down to 400. Who cares? I mean, again, if you're looking long term, I think this is perfectly fine. It is expensive, and understand their earnings based on the last two earnings were because of their pricing power. Their PE is 102. The forward PE is only 25. That's not crazy for a company like this growing at 40% per quarter. Their income, $10.32 billion. I mean, they're almost at $11 billion. So, it's up 189%. You do have support at 400. Don't want to say it's not going to go below 400, but you do have support at 400 because you've got that 200-day. Every time this one is below its 200-day, you've been able to buy it and make money. Now, look at this. This is a weekly chart. Do you think it's crazy that we're pulling back? Nope, not one bit. If you really wanted to know where you could pull back to, that 50 days at 287. That MACD has never been up this high. This was complete hype rally. So just be aware. But look at the earnings. 88 cents per share, $1.09 per share, and then $2.70. You more than doubled your per share just in one quarter. So October, they have an investor day, a product day. In November, they post their earnings on November 21st. I get into this one. It's just hard to tell you where the bottom is. I think this is just one of those Apple kind of stocks where you buy it and you say, okay, I'm going to deal with the volatility. And if I lose 10%, I lose 10%. Now, in retirement funds, be a little bit more careful. Be a little bit more discerning. That's why I trimmed at 500 in the retirement. I did not get out in my brokerage account. I'm going to continue to add in the brokerage account. Cleveland Cliffs, you guys know I have Cleveland Cliffs, I think at 18 or so. This is a Seeking Alpha article. Cleveland Cliffs refuses to sign standstill agreement with U.S. Steel. They're not allowing due diligence. So kind of douchey of Cleveland Cliffs. I guess it's a negotiating tactics, blah, blah, blah. But it's interesting. Nothing huge. I think if Cleveland Cliffs gets this buyout, I think it puts them in a better position. The stock price right now is down in pre-market. I think it's back below 14, if I'm not mistaken. 14.24 is where it's trading right now. I think it's a buy. If we go over here and we look at the insider sales of Cleveland Cliffs, that CEO who is loud and proud, he bought, let's see, Upgrade, January, Upgrade, 21, 18, May was the last thing. The CEO bought, chairman and CEO bought at $14.96 to $1.5 million worth. And that dude ain't making a shit ton of money. I mean, he's worth a lot. Let's see, chairman and CEO, Goncalves. I mean, he hasn't sold any. He hasn't sold any shares. Dude takes a good salary, makes a good living. He's loud and proud, like I said. So Cleveland Cliffs, I'm buying in. I like it. There's a great newsletter that I read last night, and I will include it. Austin Hankwitz. I like this newsletter. It is basically, no, I don't want to pay. I am free, so it is completely free. He does have some paid sections on some of his newsletters, but this is basically an options and covered calls. And he gives some great examples, great video on YouTube about it, other income producing ideas right now, DraftKings, Spotify, Mara. He likes those. So I really, really like this one. And speaking of Mara, I think it's at $8 or something. Let's see. It was $8 before earlier when I was looking at some stocks. $8.91. Again, I think this one is probably going to 10, when crypto kind of pulls up there. NVDS, by the way, yesterday, we talked about levered ETFs. Well, NVDS yesterday, when NVIDIA was down so much, NVDS was up. I mean, this one, this buy at 34, and now you're at 41. This is a 1.25 daily NVIDIA. This is a bear. So essentially, when NVIDIA goes down, this goes up, NVDS. If you want to play the other side and you say, well, I want a 1.25 levered ETF on NVIDIA long ways, you can see it's got the NVIDIA chart on it. You're hitting the 200-day on this one, and you're just sinking. You're out. The MACD isn't crossing up. The RSI is at 26. I would be a little bit careful, but this one is an interesting one. IONQ. This is quantum computing found by Brandon and touted in the Facebook group by Brandon. And I make fun of him. I can't make fun of his returns. He's done really, really well in this. I think he brought this up at about $6 or $7. It has crashed. Up here at 19, it was going to 20, kind of just rejected off at 20. Boom. Almost a double top here at 20. It did break through here, but you've just lost your confirmation. I would wait for confirmation. And I've always said this one is a great one to trade in the algorithm. It makes you 515% versus buying and holding makes you 52%. So the volatility on this one, the algorithm does work. If you want to trade the 65-minute algorithm on this one, the 65-minute makes you 86% versus buying and holding makes you 233% over 8 months. Both of these, you just have no confirmation. So I'd be careful. The RSI, it's going to bounce back up, but IONQ is a little bit overextended as far as its value goes. Remember, they're not making money. These guys are losing $113 million. Cash on hand, they have about 200, maybe almost close to 350 million. So they've got maybe a couple of years before they actually need to dilute investors. It only has 201 million shares. So be careful with this one when you trade it because your broker will have to sync that up. I will include a Webull shot. I basically in Webull, and this is part of the reason why I like Webull. And it's its app is by far way better than Fidelity. I mean, the two brokerage houses that I have are Fidelity and Webull. Those are the only two. I'm thinking about getting TD Ameritrade because I do like Thinkorswim, that platform. It just was taken over, I think, by Morgan Stanley. I forget. I think it was Morgan Stanley, but I'm just not sure if they're going to change things, if they're going to start charging for stuff. So I've been waiting on that one, but I do like Thinkorswim. Webull's desktop platform, you guys know, for free charting. I like that one a lot. It's significantly more responsive than Active Trader Pro. I think Active Trader Pro gives you a different view of it, but I don't like Active Trader Pro on the Mac. But one of the reasons why I like Webull in particular, I got an alert yesterday. TQQQ will pay a dividend of 0.13, 13 cents per share on a payable. So the ex-dividend date was 9/20, and that was yesterday morning. I got that alert. So I could have bought TQQQ yesterday, gotten a dividend, gotten it below 40. You guys know I like it below 40. But if we go and look at TQQ on the 5-minute, I would have had to buy at a significantly down place. So at 38, we're at 36 right now. So the dividend would have made sense for me, but we don't have confirmation. We've gapped down on TQQQ. SQQQ was the play. I like it, but if you want to sign up for Webull, I think you get like 12 free stocks or something, depending on how much, up to 12 free stocks, $3 to $3,000. I say it's a great app. I really like it. And I'll include a link down below or in the newsletter if you want to sign up. CrowdStrike, which was interesting. They had an investor day or something. Their CFO, Bert Podberg, I don't know, just gave us some great news. One, he committed to GAAP net income profitability for this quarter, fiscal year, and going forward. That's huge. This stock is up almost 2% today. You can see it hasn't fallen down in the past couple of days, just like every other stock. It's held up. And this is the reason. They raised the sub target from 77 to 82%. They raised it from 77 to 82%, all the way up to 82 to 85%. So huge boost up there. They raised their EBITDA margin target from 21% to 28 to 32%. They are making significantly more money. Now, the problem is they're not making an actual profit. So they're losing $93 million. Their forward PE is 48. It's a little bit expensive. Year to date, you're down 2%. Or I'm sorry, you're up 61%. Over 1 year, you're down 2%. You're only 6% below your 52-week high of 181. The average target price is 185. And these are recent target prices. All going back to January, the most recent from September is a $200 price target. So you've got some really good news in CrowdStrike. The one I like instead, and the one I have in the core portfolio, is PanW. Palo Alto Networks. This one has not held up. They have not hyped it with news. It just got you out with an 8% gain. You've got a gap here between 211 and 227. It's coming down probably to touch that gap. It's going to fill some of it. It will fill some of that gap. I think it gets below the 200-day at 226. You're at 229 right now. I would say it touches that 200-day. The MACD is crossing. It's crossed down way before. It crossed down right around this time where we should have gotten out, September 11th, which was 248. This is in my retirement account. I don't do a good job of trimming it because I do think from a long-term perspective, this one has just outperformed. And you can see, probably should have trimmed it up here this week or last week. This is a weekly chart of it. I think, the 50-day is moving positive. Those Bollinger Bands are cinching up. Could I time it and trim it and buy it back? Yes. Am I too worried about it? No. CrowdStrike forward PE of 48. If we look at PanW, their forward PE is 36. And that's the only reason that I like this one. And they're making money. Two reasons. They're making money, and their forward PE is a little bit lower than CrowdStrike. But CrowdStrike did not put out that great guidance, so kind of mic drop on that one. I like that. Scans. So let's talk about Sedge. We talked about it yesterday. It was up yesterday. Sedge was. It got a cross up here at 141. You are down 1.39% to 137. I would be careful of this one. Again, is it time to buy solar? I don't know. Who knows where the bottom on this one is? If we look at a long-term on Sedge, it just crossed up on the algorithm. That's why I'm bringing it up. If you look at a long-term, this is a weekly. You're below that 200-day. I mean, this is the first time it's gone below that 200-day. So there was a great article in a couple of newsletters ago, Sedge versus Enphase. And Sedge was, in my mind, Sedge was a clear winner. We talked about Pinterest. Pinterest had a cross-up. Pins, P-I-N-S. And I said, like I said earlier, I think in my mind, if I'm playing pins, I'm playing it to go to 30. So I'm going to have my stop losses tight. It's at 26.76 right now. If I'm looking at this one as a long term, in my mind, I think Meta is the better long term. Just from hey, they're making a ton of money. Their PE is forward PE is significantly less. We talked about Cisco buying Splunk. The other one, Microsoft buying ATVI, which is Activision Blizzard. This is set to go at $95 per share. You can see since the U.S. kind of lost their deal on this one with the and the earnings came out really, really good. This one has just kind of fluttered between 90 and 93. So nothing really to say. It does have a cross up. Your original cross up is back here on August 22nd at 91.65. You'll make a little bit of money if you want to buy this. The deal's going to go through. It'll go through at $95 and you'll get basically, $95 a share. IBM crossed up. This one's a mainstay. I mean, this one has had a bit of a rebound this year. Not a huge rebound. I mean, from 123 back in May all the way up to 150. But the 150, if we take a look at a long term on this one and we go weekly, you'll see it hasn't, outperformed. It's just kind of fluttering around that 200-day. If we go even longer and we go to a monthly, you'll see how badly this one has performed. Just, this is 2013 where it was at 191. You haven't done anything, and you're just kind of hanging around that 200-day. Has a cross up. It's not super, like the only reason you like it is if your name is Walter and you're sitting in a rocking chair and you like that dividend. What's their dividend? Let me see. Or your grandfather told you. You're 90 years old, but your grandfather told you IBM's the way of the future. It's got a 4.48% dividend. It's good. Year to date, you're up 5%. 1 year, you're up 17%. You can't sneeze at those numbers. That's really good. IDXX. This is one. I like this chart. And I like this chart because you've got, the 50 days moving down. It's crossed under the 200-day. But from a long-term perspective, I mean, look at the other times where it crossed under the 200-day. If we move this one back a little bit, I mean, it's just been a high flyer. If we go to a weekly and we look at this, this is one that just has continued higher since COVID. I'm going to move this back a little bit. Ooh, Palantir CEO coming up on CNBC. I just saw his photo. So yeah, the VWAP, the volume weighted by average, is pulled all the way back to right before COVID, and you had that pop up there. This is where the majority of people are holding it, up here. So IDEX, I think again 480 or so. I think you've got a good right around this 200-day. You got the golden cross. That's why I put it in there. RTX, this is a industrial defense contractor. They had an engine issue. So RTX, we were talking about this one. Christian says he likes it for long term. This one has been beaten down. I don't know where the beat down ends, but 74.87, it's trading at 73.77. Your RSI is significantly down at 26. Your MACD is kind of crossing up down there. If we go over to FinViz and we look at RTX, and we kind of take a look at some of the industrials. This had a forward PE of 13, a PE of 19. If we just look in the aerospace and defense one, and we rank it by PE, we'll take a look. It's not huge. I mean, it's really not huge from a PE perspective. So in this particular industry, we go back down to the second page, and you can see RTX is the second page. So what is it, 10, 15, or... it's 20 per. So it's 21, 22. It's not crazy. I mean, it's come back into thing. If you want General Dynamics, you could look at the difference in the stock charts. General Dynamics is actually doing well, and they've got the same PE. Different kind of systems, they're in the same thing. You can, choose and pick which one you want. I think RTX has just been beaten down unnecessarily. I think they come to fill the gap up, but I'm not putting my money into it because your boy's a tech investor. So, okay, I am done with the podcast. If you have any questions about links that you've seen in here, sign up for the newsletter, which is dailystockpick.substack.com. I included Penny's picture yesterday. You can see that. It's free. The weekend one is paid for. It's $8 a month or $80 per year. The only reason I do that is because I do put a lot of work into the weekend ones. They're more educational. like the places I learned to technical stock trade for free on the internet. So I provide you free links there. What was the previous one? Let's see all. And I think paid subscribers can go back longer. I think I archive for 2 weeks for free subscribers. But Smart Money is diversified money. Apple this week shows you why you may want to stick to the 5% rule. 5% rule, just so you know, you don't need to pay for this one. The 5% rule is you don't put more than 5% of your portfolio into one stock or one ETF. You have it broadly diversified. Now, if you buy VOO, you could buy your entire portfolio in VOO. That is just an S&P tracker fund. So it's educational stuff like that if you want that. If you want to join our private Facebook group, it's up there. There's our X or Twitter, Instagram, YouTube, blah, 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 all of that. If you want to email me, it's right here. TrendSpider, 25% off. You can get it for $780 a year. You do need this middle tier, the elite. If you want to skip the 7-day trial, you save 40%, $468. That's huge. I mean, $468 is not, it's a lot of money, but when you think about the amount of money that you could save or make using the charts and the algorithms, in my mind, it's pretty well worth it. But that's the first one. The second one, if you're spending more than $20 a month on $35 a month, I think it's $30 a month on Visible. Visible is my phone service. I use it. I love it. I pay $25. I got in at a special. They haven't raised my rate. It's been super, super good. I do like that one. If you're thinking of buying a Tesla, I particularly was looking at Tesla Model Ys last night. I think I can sell my car for about $25,000. And I can upgrade to a Model Y for $49,000. And I can transfer my full self-driving over to the Model Y. So it's an interesting kind of thing. I don't know that full self-driving gets me a ton of money on a resale. It should, but I don't think that it does because, if you're in the market for a Tesla, you're in the market for probably a newer one. So Savvy Trader is a good one. If you want to follow my trades, you can gift me with PayPal and Venmo. The one that I do think that you should really look at is Webull. I mentioned it before, those alerts. I like the morning kind of summaries of the market. I read them. I really like Webull. And you can put in as little as $3 and trade in Webull. I like it. I put in $1,000 in there at the beginning of the year. Let's see where we're at right now. I think it was like 2360. My main portfolio holding is Apple. Apple I am up 22% on. Caterpillar I am up 3% on. Boeing, I bought one share of Boeing, and I bought it at a higher price. It doesn't tell me, but I'm down 7% on Boeing. The rest of the stocks were given to me by referral links. Ford, Spotify, Snap, Kraft Heinz, Google, Coke, Procter & Gamble, Starbucks, and Gap. So they give you I think they give you a lot of Ford and Spotify. But they're not bad companies. I'm down 13% on each one when it was given to me. But it's been a good, again, 2360. You can't argue with that one. Apple is the biggest one that I'm up by. 22%. I've been trading Mara in there. I've been trading TQQQ in there, and that's where I got that. You'll see it in the newsletter, TQQ alert. But I think Webull's the good one. And again, Seeking Alpha, I'll include a link to Seeking Alpha. I am working on trying to get that into my system. Once I get that into my daily system and I figure out how it fits into kind of looking at stocks and understanding things, I'll bring it on the podcast. I'll have a bit more, but you can save $50. So far, I really, really like this. In my mind, it is worth the $189 a year. They give you tools. And again, this isn't for somebody who's got TrendSpider right now. And the reason being because I haven't worked it into my system. So until I get that, I would say hold off. If you really want Seeking Alpha, though, I'll include the link. You guys can see for yourselves. I mean, go over to the free version of Seeking Alpha. You can see how much they give you. So I like it. I like it a lot. I will talk to you guys tomorrow. Take care. Have fun. Bye.